The following program is sponsored by Max Out Savings Advisors. The views expressed during the broadcast are solely for entertainment purposes and do not necessarily express the views of KNTH, its management, Max Out Savings Advisors, or its sponsors. Max Out Savings Advisors and members of the Max Out Savings team may or may not hold securities mentioned during the show. Plan for your prosperity, prepare for your retirement, safeguard your savings, and nurture your investments. This is the Max Out Savings Show with Ted Geoca, a presentation of Max Out Savings Advisors. Now, here's your host from Max Out Savings Advisors, Ted Geoca.
Good morning and welcome to the Max Out Savings Show. I'm Ted Geoca and we're talking savings, investments, in your retirement. Our show is all about building up wealth, understanding the world today, and navigating through very turbulent times. Our motto of the show is really to save aggressively and invest conservatively. That's the key to building up wealth over the long term. Save aggressively and invest conservatively. It always starts with your company 401k plan. You want to start that first and make sure you're saving minimum 10% plus a company match. That's a minimum. The numbers are 13%. If you're under the age of 50, now's the time to ramp it up above that. We have lots of our clients saving 15, 20, 25, 30% of their savings each year. The Japanese and the Chinese save 25%. So what's your excuse? Now's the time to build up that wealth, take charge of your retirement, and take charge of your life. So save aggressively, invest conservatively. We have a lot to talk about on the show today. We're going to be discussing really some interesting things happening in the banking world. We're going to be talking about some fascinating things with the sale of the Lakers. And why does that affect your retirement and who cares? We're going to be talking about what's happening here in the world with the energy market, with the war with Iran, with the war with Russia. How are these all affecting things? Are we in a global world war? We're going to discuss that. How do we navigate through that? So we got a lot to talk about on the show here today. First, I wanted to just touch base. A couple things. I think we're still looking at a world where it's going to be that's really rapidly changing. And look at some of my notes, really rapidly changing. I think there's a lot. What we try to do on the Max Out Savings Show is really bring you things you're not hearing from everybody else out there. We want to really give you ideas, ways to do things to understand the world today. And one of the bigger things out there really is we've been talking about this on this show, these changes that are happening in the banking system and the Federal Reserve. We've been talking about people who've been making fun of Kevin Warsh. He doesn't know what he's doing. Why isn't he cutting rates? Wall Street is desperate for lower rates. And the Federal Reserve for the last 25, 30 years, candidly, they've been doing nothing but cutting up asset prices. The minute the market falls in the least amount, they come rushing in to try to rescue it. And the market's down 7-8%. They want to do quantitative easing, emergency. They were never supposed to be buying corporate bonds during 2020. And then they rushed in and started buying, quote, ETFs, like that really wasn't a corporate bond. And look, there was plenty at the time. You could buy bonds at great prices, and we were in there buying them, and for our clients. And then all of a sudden, we have to compete with the Federal Reserve, and pricing went up. But the problem is they're always bailing out Wall Street. We got $39 trillion worth of debt. This game is coming to an end. The old bailouts, the minute they start doing it again, you could see the dollar start collapsing. There's no telling what could happen. Inflation could explode. And there's real problems because the Federal Reserve the one record they have is they've had a remarkably good record of basically destroying the value of the dollar from 1913 to what it is today. It's worth cents on the dollar. Cents on the dollar. And everybody's up on the game. We got $39 trillion. So they've got to change it. They have to sit there. They have to now sit and look at the markets and say, hey, what are we going to do? How can we look responsible? How can we look like we're doing the right thing? So people want to invest in the United States. They want to buy treasuries to fund the $39 trillion worth of debt. And at the same time, the dollar doesn't fall apart. And so that's kind of, so they have to look responsible. So what Kevin Warsh is doing is, and this is a big story. Look, I mean, how many times have you heard people say, don't fight the Fed? I mean, why am I all 100% right? Don't fight the Fed. I mean, the economy's collapsed. Who cares? Don't fight the Fed. Well, that's come to an end now. Everybody gets the game. So what they're going to do is they're shifting over instead of the quantitative easing going forward. They do the quantitative easing. The banks get a huge amounts of money coming in. It immediately gets lent out to Wall Street, particularly big hedge funds like Citadel, Jane Street, all these hedge funds. They're taking up massive amounts of leverage. Jane Street has $770 billion worth of securities, mostly ETFs in their portfolios. They got $55 billion worth of debt. I mean, excuse me, of equity. Think about that. And I think they just borrowed $15 billion. They lost $15 billion the other day, although they're up on the year. But again, that's an awful, if you put the leverage on $777 billion. I'm struggling with the size of the numbers. And then divide it by 55, you get a pretty big number of massive amounts of leverage. And so every single Fed comes in, Wall Street makes a lot of money, speculators make a lot of money, middle class is devastated, working people struggle, home prices go shooting back up, young people can't afford to buy a home. I mean, I have heard people worth $20 million, okay, I suspect, or more from what I've been told, complain about how their kids cannot buy a house. So this goes all across the spectrum. Now, maybe they could help their kid buy a house, but it just shows you the level of concern across the country. And we just passed a great new housing bill that forbids corporations from buying houses. But if you study the bill, the corporations can buy 350 houses. Well, then they just start another corporation and do the same thing. So it was a shell game, as always, when it comes to Congress, Republicans and Democrats. Rather than sitting there saying, we don't want corporations buying houses, we want big corporations to divest houses, and we want working people to be owning houses. And ownership of a home, ownership of property, which starts at a home, is a key fundamental ownership is a key fundamental basis of the United States of America. I mean, Chinese are more interested in owning the homes than Americans. I mean, honestly, in the end, where do I want to be? Do I want to be in China, where everyone else seems to own homes and big savings rates, or do I want to be in the United States of America, where we have a capitalist system? And then what happens is corporate America owns all the homes and people don't own nothing, but they get to have some money in their 401ks. I mean, that is not a good situation. Look, we love 401ks. We don't manage them, but we manage retirement rollovers, things like that. Don't get me wrong, but understand, home ownership is a fundamental bedrock of the United States of America. And we have corporate America, BlackRock, and the rest of these people coming in and basically taking over the market so they can make money and disadvantaging our young people, our children, and our grandchildren in the United States. And it's not acceptable. And so what we want to do is we want to, so what they want to do is, and look, they understand this. One of the things they want to do next time the quantitative easing comes in, when, whoa, the economy's going down, the market's down 20-25%. What are we going to do? The answer is going to be, let's put money into the banking system. Now, here's the thing. This is the key point. Does that mean, we want the money to go into the banking system so it goes rushing up to Wall Street so Ken that money going into the banking system, stabilizing the industrial economy of the United States of America, creating jobs, and also giving people the confidence that they won't lose their job? That's the big question. And so we're starting to see that happen. And this, again, you're not hearing about this from anybody. Okay, here's another story I just came up with. Morgan Stanley and now Bank of America mobilized, quote, to deploy $250 billion into America's infrastructure super cycle. The announcement comes days after Morgan Stanley launched into U.S. innovation infrastructure aimed to facilitate $1.5 trillion in capital raising and financing over the over the next decade. Now, what have we talked about with some of the banks? That where some of the banks, I think Bank of America has about 13. They might have more. I know they have closer to 20% of their assets are loans. Most of the lending, particularly at Morgan Stanley, at JP Morgan, it's like 12, 13% loans at JP Morgan. You think it's a bank. It's not. It's a funding operation for Wall Street. Okay. Here's the problem. They've been doing this for decades. Well, what's happened in decades? What's happened in decades is our industrial infrastructure and our industrial manufacturing base in the United States has collapsed over the 25, 30 years. During that time, as everything's been moved to China, and now we're trying to get that industrial complex back, the remanufacturing back to the United States. We want drones made here. We want planes made here. We want cars made here. We want drugs made here. We want the critical parts. We want motors. We want magnets. We want all types of the things that go into manufacturing. And we want to have that manufacturing base in place. Another reason is if I come up with a great product, a new product, oh, this is exciting. I'm going to maybe need motors and different things. Well, if I have to go to China for everything, what good does it do? So we're moving those things back. That never mind if we go to war with China and we're cut off completely. So what I want you to understand is we are moving back. The banks are now moving to finance the remanufacturing of the United States of America. That's not good for Wall Street because that money's been parked up there in speculators' hands. You start out with $2 billion worth of capital. They leverage it up with $4 billion worth of stock. And during the day, they likely are buying billions more intraday trading all over the place using AI. Jane Street, which we mentioned with the hyper leveraged ETF fund that got caught manipulating ETFs in China. Jane Street is putting together a gigantic AI for like a $15 billion AI facility for some people so they can increase their trade. Again, we're not interested in this type of crap, quite frankly. We want to hear about a manufacturing plant coming back. We want to hear about a drug manufacturing plant coming back. We want to hear about a new auto plant coming in. We want to hear about, hey, there's a new company building motors which are going to be used for robotics coming into Muncie, Indiana, or wherever. That's what we want to hear about. We don't want to hear about AI centers in Wall Street and speculation. That is not in the long-term best interest of the United States. You're seeing this shift. The Federal Reserve understands that. The Federal Reserves are making changes. Who regulates the banks? It's the Federal Reserve. They're talking to people. JP Morgan, who we said had 13% loans, suddenly comes up with this $1.5 trillion that they're going to be investing in manufacturing in the United States of America, according to Jamie Dimon, over the next 5 or 10 years. Again, this is a big shift, what they're doing. But remember, that money is going to come out of Wall Street. That's not the best for Wall Street. But there's a lot of demand for money. There's $800 billion for AI that's going to be spent this year, $1 trillion next year. We got a $2 trillion deficit. We got $400 billion in additional defense spending because about 30% of our military is now obsolete because of hypersonic missiles and drones. This is a big story. Look, am I happy with additional spending? No, but that money has to be spent. We got a real problem. This Iran war, we've bumbled into this because, some people convinced us it was a good idea and it clearly wasn't. And so here we are. But it's changing a lot of things. It's costing a lot of money to make these changes. Now, likely they were going to happen anyway. What the Iran war is, it's accelerating a massive restructuring of the military. And so again, I want you to understand there's lots of opportunities happening. Things are really moving along, but there's massive demand for money. Money is going to get more expensive. We have inflation. And so things are changing. This is not the stock market of the last 25 years where it's basically run by a bunch of speculators on Wall Street in cahoots with the Federal Reserve. We'll be right back to discuss more about this and where we're going to go from here, right here on the Max Out Savings Show.
The Max Out Savings Show with Ted Geoca will return shortly. To speak with Ted Geoca now, call 713-339-1070. Back in a moment with the Max Out Savings Show.
I'm Ted Geoca, and I approve this message.
Inflation, instability of the market, bonds, precious metals, oil and gas, and lack of old-fashioned cash puts your retirement at risk. It takes a different type of portfolio to deal with these issues, and that's where Ted Geoca can come in, and he can help. Go to maxoutsavings.com and schedule some time with Ted. That's maxoutsavings.com. And listen to the Max Out Savings Show every Saturday at 10 a.m. on AM 1070 and FM 1033. The Answer.
I'm Sam Malone, president of 512 New Media. We're Houston's leading marketing and content creation firm for many reasons. Our assets are exceptional, from video production to web design, strategy, and the ability to say no. Saying no is integral in launching a successful, profitable campaign. For example, take a look at Memorial Day. It's a federal holiday set aside to honor and mourn those in our U.S. military who died while serving our country. I'll say it again, for those who died while serving our country. So how does having a sale work in unison with the reason for the day off? Look, we know people will be at the beach and barbecuing and having parties. We would probably say no to launching a Memorial Day sale. So is there another way to commemorate the day while marketing your brand? Absolutely. And from our experience, the same holds true with Easter Day sales and MLK Day sales and Christmas Day sales. That's why we're different. No cookie cutter, follow the crowd, template marketing. Let's talk. We're 512 New Media. 512 New Media. With better marketing comes better value, creating better results.
In the 1970s, the big song was the Bee Gees' Staying Alive. Well, it was difficult back then to stay alive if you were a retiree. Inflation was running rampant, and since then, over the last 25 years, it's gone away. Well, inflation's coming back, and it's going to endanger your retirement. If you're a retiree, inflation is your biggest enemy. Hi, this is Ted Geoca of the Max Out Savings Show. If you need help with your retirement, I'd like to help you out. Go to maxoutsavings.com. That's maxoutsavings.com, and we'll show you how you manage through inflation. Don't let inflation destroy your retirement.
We return now to the Max Out Savings Show. Here's Ted Geoca.
Welcome back to the Max Out Savings Show. We're talking savings, investments, and your retirement. We're just talking about this huge shift that's happening in the economy. Everyone's heard about AI. They know about the remanufacturing. But how do you finance that? How do you finance $800 billion a year, $1 trillion next year? Keep in mind, President Trump has 500 to $1 trillion. He claims $2 trillion for the factories. We're using somewhere north of $500 billion worth of factories, manufacturing. Come back. Who's going to finance it? They got a $2 trillion deficit that we have to, and then we have a $39 billion worth of debt, which we have to service. How do you handle all that? And the point I'm making is there's a massive shift undertaking that people aren't talking about. They're not understanding what's happening. And because you got to finance all that money. The Arabs, they're going to need hundreds of billions of dollars to rebuild bases and to rebuild refineries and different things in the Middle East. Never mind with Russia. There's just demand around the world for money, and so what you're seeing is the Federal Reserve has to be cognizant of that, as well as the big bankers, and they've got to sit there and fund these trillions of dollars worth of work here. And so this is what you're seeing. Here's another example. Morgan Stanley to facilitate up to $1.5 trillion of loans over the next 5 years. And what they're talking about again is rebuilding manufacturing, is AI centers, is digital infrastructure, power. I saw a story of just, well, I'll cover that in the next segment on just the power issues. I was in Abilene yesterday, and the data center, and looking at the data center, that thing is like unbelievably huge. It's just absolutely massive. It looks like a town. And this is a $50 billion data center in Abilene, Texas. You're building up there, of course, because they have cheap wind energy, cheap solar energy. There's excess of energy. There's power lines going up all over the place to fund it, to fund the wind turbines, to win the solar power. They got to move that around. This all costs money. And so you're seeing the shifting happening in banking. And what I believe is going to happen is I believe it's going to tighten up money for Wall Street. And I think this is what we're looking at. And so the next thing we're going to see happen is going to be demand. Is the demand for money is got to come from, the money has to come from where it's likely going to be Wall Street. And so I think this is something we want to continue to watch. Now, and we'll keep you up to date on that again. And the other thing that we talked, and we've mentioned this on the show, Kevin Warsh, again, Wall Street's all upset because they're not cutting rates right away. Well, look, as we said, the Fed is shifting their balance. They have huge sway over the banks. All of a sudden, all these banks are announcing. Then they also have those 5 committees that the Federal Reserve put in. Some of the brightest people in Stanley Fischer, the former CEO of Walmart. These people don't get on a Federal Reserve committee to sit around and meet and have drinks. People like that, they're only going to be on there as, hey, are we going to make a difference or not? These are difference makers. These are some of the brightest minds in finance. Mervyn King, they're on these different committees, everything from inflation to communication to infrastructure. They're all these different things, these big committees. So there's big changes happening. Kevin Warsh wants to know, how do we correctly determine what the demand is in the economy? Well, he talks to the guy, he gets the ex-CEO of Walmart to come on and say, hey, explain to us, they have an enormous, I think they're the biggest employers of PhD economists, but Walmart's going to know more than those people. It's the same thing with some of the tech people. Mark Andreessen for technology. How does productivity come in? I think you're going to hear more about productivity in the future because robotic factories they improve your productivity. Keep in mind, the robots we believe are going to be the next big thing for 2027. And so, but all these things are happening. Where's the money going to come from? The answer is Wall Street. So wanted to just kind of touch base on that. We had some inflation numbers come out. And again, this is inflationary when the AI company that's, the $50 billion AI facility, they're spending money like no tomorrow on that type of stuff. But if you look around, there's also the power that, the generating plant, they're spending money because they want their stuff done. Elon Musk, for his macro hard AI facility in Memphis, he was so anxious to get that up on thing. They said, well, look, sir, we can't get you the power. Well, give me the power. We cannot get you the power. It's impossible. He moved over diesel powered generators to get enough power to start the thing up. Now he's got deals with Google and with Anthropic and OpenAI and different people like that. Some of these deals are worth $500 million a month. So again, these people are paying up. We got inflation going up. And to make matters worse, we're in a situation where we have a war, and we're going to cover some of that in here too. How do you deal with the war and inflation? And how is this all going to play out? And what I think is going to happen is a couple things. I think long rates are going up. If you look at the 30-year, it's 5.26. We had a 30-year auction. It was the highest in 25 years for rates. Right now, it's at 5.26. I think what I think is going to happen is I think you're going to a yield. If you look at what the banks are doing, they seem to be positioning for yield steepening, which can go either way. It means that rates are going up, or likely interest rates are going down on the long end. I think the Fed has more ability to control interest rates in the long end, and so we could see them push down rates some on the longer end. And I think that's why we sort of like the 2 and 3 year paper in here, bonds in here, because we can lock in a good return, and then if we get a big inflation, we're not going to get hurt that much. If the Fed cuts, if we get cuts in the short-term rate, we will sit there and keep in mind, we're getting a little more than the short-term rate now. Money funds are about 3.5, 3 3/4, somewhere like. We're getting 4.2, so we're locking in the good rate, and we're protected for 2 years, 3 years. that I think that's one of the things that, because the banks appear to be kind of positioning their assets, if you study their balance sheet a little bit like that. But so understand big changes happening on Wall Street, bigger changes happening at the Federal Reserve, even bigger changes happening in the manufacturing base in the United States. Remember, this is exciting. We're finally building up our manufacturing base, something that we've lost. We sat on the Max Out Savings Show. This show started in 2006. It's been here for we've been on for 20 years. And we go, why are we letting China take our factories? Why is this happening? We would go, look, we came on one show. There was research that says there's a 15% advantage in manufacturing in China if everything was equal, just because of they have no anti-pollution laws. There should have been a 15% tariff slapped on immediately because of that. They wouldn't do anything. They let all the factories go over. Corporate America profited massively. Their margins went up. They fired workers. They closed down plants. It was disastrous up in the Ohio, Pennsylvania, utterly disastrous for the manufacturing bread basket of the United States. People did nothing. Well, that's all coming to an end under Donald Trump. Say what you want about the guy. He is serious about two things: shutting down the border and bringing back those manufacturing jobs. And, he has talked about that. Everybody knows it. And you had this elite class up in Washington, D.C. and on Wall Street that profited massively for the destruction of our manufacturing base. Now we're paying the price. We're fighting a war in Iraq, and it's not looking good. And part of the problem is our manufacturing base, and we're changing it. The president had to call in the heads of the big defense companies. Said, look, guys, what the hell is going on here? I'm paraphrasing. I was not there. But obviously, it's like, you guys are taking forever. Sir, it's going to take us another 15 years to get all the missiles you need. Well, how is that possible when in World War II, where they were throwing a B-29 bomber out the door, every couple hours? I mean, I don't understand. And so he's forcing these guys to sit there and start spending money, increasing their manufacturing capacity, getting smarter. I saw a story about there's a new drone that a radar-seeking missile that Boeing came up with on-the-shelf parts. I mean, who could have thought? And how it's a huge savings. But not only that, but they can get the missile out much quicker and produce it quicker. And again, we need to start thinking out of the box. We need to adopt a World War II attitude with our Defense Department and start building it up. Yeah, look, we're in this war with Iraq right now. This is, again, it's not a good situation. I wasn't for it. I think we got played, quite frankly. And but here we are. And I think a couple things: the missiles, Iran. A couple things. Iran managed to harden a lot of their facilities, something that the U.S. should look at doing. The missiles and the drones have kept us off. We don't have enough missiles. I mean, I think we've kind of stopped giving Patriot missiles to Ukraine. We don't have enough Patriot missiles. Well, we knew this 5 years ago. Nobody did anything about it. 5 years ago, they knew they didn't have enough missiles. Look, if there's a war and it lasts 30 days, we will destroy every country on the world. They can all gang up against us. Well, they can't do that, but we can beat every country in the world with the 30-day war. The problem is, if you look at wars, they never last 30 days. They never, as President Trump has said, typically wars, they go on. People think it's going to be World War I. They thought they'd be back in 3 months, and it took years. World War II was 5 years. What the people that win wars are the people that have a manufacturing base that can turn out the product. Look, there's that old saying, you have a pretty good plan till you get hit. Look, I believe we just got hit, candidly, and it's not President Trump got us into this. Well, I would say Netanyahu got us into this war. But candidly, we need to sit there. We should have woken up, as I said, 5 years ago, and we didn't. And so this is going to create jobs. It's going to increase productivity. It's going to bring factories back here. We're moving the funding of this. And these are exciting things, but this is going to be inflationary. If you look at the price of the DBA, which is the agricultural index, it's up about, since the war started, it's up about 6.8%. And we talked about, we went over this when the Russia war, within a week in the Russia war, we had a report out, maybe it was 10 days at the most, pointing out the percentages of wheat and oats and aluminum and different things coming out of the Ukraine or Russia that were shut down and why it was going to be inflationary. Well, we're in the same situation again. You look at the DBC, which is the commodity index, one of the commodity ETFs. It's up 20% since that February 27, 28 start of the war. That's the basis. So when you see that that the July PPI came out unchanged, well, don't believe it for a second, because yeah, maybe it is, but these prices are already up this much. I mean, it's like if prices go up 50% and we don't have any inflation for the next 2 years, that's doesn't mean that prices are going down. That means they're still up 50% and everybody's still suffering. Again, with such demand for wars, understand we have a war with Iran. We're helping out the Ukraine with Russia, which is getting to be we're helping with the targeting. I'm amazed Ukraine has held on as long as it has, but this is two wars that we're involved in. In the Iran war, it's not just the United States; it's mostly us, but Bahrain, Saudi Arabia, UAE, Qatar, Kuwait, they're all in it over there. Pakistan signed a joint agreement and Turkey have signed a joint agreement. If Iran is attacked, Iran's being attacked by Yemeni, does this mean Turkey and Pakistan are going to come in to help protect Saudi Arabia? Likely, at some point, they're going to have to. So this is spreading. It's getting worse, and it's pushing up prices of commodities. At the same time, you got this huge rollout to rebuild the manufacturing base in the United States. At the same time, you have the AI build out, which is they're talking $1 trillion a year spending. Again, there's nothing but inflation, and then you put a $39 trillion budget deficit on top of a debt on top of it, with a $2 trillion budget that's likely to have to go up next year. That's a very volatile mix of events. And so in that market, you got to be very, very targeted with your investments. You want to be in the right things. You want to be in companies that are going to maybe make drones, make anti-drone systems. You want to be in companies that are gonna they're going to profit. Maybe they make the copper, maybe they make the gold or silver, maybe they make the aluminum. Those things, there's huge demand. You want to be in those type of places to take advantage of that. And at the same time, you don't want to overpay when there's a complete frenzy out there. You got to be careful. There's a study that in the 2024 that Yale, this I think was in the Journal or the Barron's today, that Yale and Indiana University did on high dispersion. And right now, the dispersion on the S&P 500 for their targets is about 62.5%, which means there's a big difference. Typically, it runs about, what is it? I think I want to say it's about 43% is typically what it is. Well, if you look at the studies, markets tend to have much more volatile outcomes, which hence the thing. When that happens, when there's kind of an agreement in one direction or another, the markets tend to kind of go in that direction. But when there's a lot of the big dispersion of potential, hey, I think it's going up 10%, I think it's going up 5%, I think it's going down 15%. When you get that diversion, that's when you have to be more careful. And at that point in time, the targeting of the earnings and the targets becomes much less reliable, because what it's showing you is candidly, people aren't real sure what's going to happen. Some people are sure it's going to work on the upside. Others saying it's on the downside. So they're looking at the same data and coming up with different conclusions, which means they're seeing different things out there. And that's when you get more of an unstable, a destabilized market. And I think that's kind of what you're looking at in here. We had that drawdown with the collapse of the hedge fund situational awareness here at the end of July. We've talked about earlier in the show, Jane Street lost $15 billion that day. I mean, not that day, but that month. And there was a lot of losses on that. And then they kind of got bailed out by Citadel. But this isn't over yet. Again, this big dispersions in the market. This is signaling changes are happening. At the same time, we're talking big changes in the banking sector. So anyway, all of those things, much more clouded outlook, but a lot more opportunity as well. Tell you what, we'll be right back right here on the Max Out Savings Show.
The Max Out Savings Show with Ted Geoca will return shortly. To speak with Ted Geoca now, call 713-339-1070. Back in a moment with the Max Out Savings Show.
I'm Ted Geoca, and I approve this message.
Max Out Savings is looking at rising interest rates, the bond market, and our country's spending to project the impact on your retirement. They use that data to help you flex to current conditions with your future in mind. Call 713-627-0400 to learn more. That's 713-627-0400 or maxoutsavings.com. Remember, you can hear the Max Out Savings program right here Saturdays at 10 a.m. on AM 1070 and FM 1033. The Answer.
Hi, I'm Sam Malone, the owner of Houston's cutting-edge media company called 512 New Media. At 512 New Media, we create amazing videos that companies use on their websites, telling their story in bold colors with exciting animation and graphics. At 512 New Media, we also shoot television commercials and instructional videos. And if you want to show off your business from the air, we're ready to go with our drone video aircraft. Let us help you create your media message. We're online at 512newmedia.com or call 281-822-8803. 512 New Media is Houston's only media creation and distribution company that's actually owned by someone who's currently on the air. And that gives us an incredible edge when creating content for consumers to use on their laptops, tablets, and smartphones. Standing by to create your message, we're 512 New Media, 512newmedia.com.
This is Ted Geoca, host of the Max Out Savings Show, one of Houston's most popular financial radio shows, celebrating over a decade on the air in Houston, Texas. With stocks at record high valuations and interest rates near record lows, you need to have your guard up. You need to have a plan to manage risk to your retirement. Do you? At Max Out Savings Advisors, we have a risk-based value investing approach to your retirement. If you would like some help managing your retirement, go to maxoutsavings.com to set up an appointment. That's maxoutsavings.com.
We return now to the Max Out Savings Show. Here's Ted Geoca.
Welcome back to the Max Out Savings Show. I'm Ted Geoca. We're talking savings, investments in your retirement. One company I want to mention is one of our sponsors, Advanced Longevity. They are a longevity company that helps you understand your health, helps you understand how to live longer by taking care of your health and addressing any problems you might have. They have an incredible operation in Bel Air, Texas, with some of the latest, really the latest imaging technology. I think their CAT scan, I think it does about 53 slices or something like that of your body as it scans. This scan literally takes 5 minutes. Boom, you get in and you're out. 5 minutes. And so what you see is you get a complete outlook of your body. You can see, hey, where there's problems. They can see cancer. It can see heart issues. It can see all types of issues. It can see bone issues. And so it's a good way to start, particularly if you're getting up there, retiring, to, find out what your problems are so you can head them off at the pass. And so it's a great program. They have a special for listeners in the Max Out Savings Show for husband and wife to both get a scan at a very reasonable price. If you're interested, give them a call. It's Advanced Longevity in Bel Air. And so I think I've got the number right here. If you want it, it is. Well, I'll give it to you before the end of the show. But it's Advanced Longevity in Bel Air, Texas. So if you get a chance, give them a call. If you really want it, they have incredible they do peptide research. They do all types of stuff there. This is really cutting edge stuff that's really just not available in most places. Advanced Longevity. Tell you what, let's take a call from Charles real quick. Charles, welcome to the Max Out Savings Show. Charles, you there?
Hey, Ted.
Morning.
How do you see gold faring in all this?
I like gold. Gold is up. It's right now it's about 43.75. It's kind of broke out. It broke out above the 50-day. So did silver. Right now, gold is right at the 100-day, so it needs to break out above this. There still seems to be big buying across Asia of gold. They're interested in it. There's a lot of turmoil out there with Japan. Something to really keep an eye on is the carry trade. And so, I think gold seems to be has found its footing in heading up a little bit. The higher oil prices are going to start hitting in August, September. That's going to push up inflation. And so, yeah, I like gold. I like silver. The mining companies are looking very good. Most of them had pretty good earnings. There's a few issues with a couple of them, but if you look at some of these companies, they're trading at 9 times, 10 times earnings, which is very cheap in this market. And I think they're going to beat those numbers.
Thank you.
Okay, take care. Good question. Gold, look, again, we like it because it's an alternative to the dollar. Yeah, in this world, look, we brought up a lot of big changes happening. And when you're dealing with big changes, $39 trillion worth of debt, all the Japanese carry trade, which is that's what happens is the yen keeps falling. Once they start coming back in and it starts going up, it's going to put a lot of pressure on the Japanese to take money out of their around the world and bring it back in, repatriate it to Japan, which could cause problems. All that is good for gold. And so I think this is something we want to continue to watch. Looking at and again, if what I think is going to happen in the 2 years, the short-term rates start dropping off, and I think they're going to be more concerned about the short term because that's where they can refinance the debt and reduce the debt. That's going to be bullish for gold as well. So some thoughts on the gold market. When it comes to retirement, understand this is a long-term game. And so when you're dealing with all these issues, what you want to do is you want to navigate through those things. You want to navigate through this big inflation. You want to navigate, which is starting to look like some type of world war with all these, does this thing morph into a world war with Iran, the US, Russia, Ukraine? Does something go badly wrong? There's a problem with the $39 trillion debt. How is AI going to affect things? How is this remanufacturing? There's a lot of positives, but a lot of negatives in that world. You have to diversify out. You want to own stocks. You want to own bonds. You want to own precious metals. You want to own commodities. Again, there's shortages of commodities everywhere. Copper's breaking out to the upside. The demand for metals is just enormous everywhere. And so in that world, you're going to have 25, 30, maybe 30 years for retirement. Think about that. You got to make sure your money goes from point A to point B 25, 30 years from now with a reasonable amount of money in the end. And I think the real challenge is going to be is navigating through these type of things. And I think it's more than ever, it's going to be important to do that. Like I said, that's why, we really, the trick is to find things that are going to work long term. Like I think Amazon in 99, Amazon is a phenomenal company. It's one of the biggest companies out there, but in 99 to a couple years, it fell like 80, 90%. So it's really easy to talk a big game about I'm a long-term holder where, but most people can't withstand those type of losses. And so you have to have some type of plan in place. And I think we've got a pretty good one at Max Out Savings Advisors. But again, it's all about spreading out risk to the market. Fascinating story. I think it was the Journal today. How America became a nation of Luddites, and which is I think this is a really big story because people are becoming really concerned about all this not just AI, but they're concerned about technology. Really, what's changed with technology over the last 20 years? 20 years ago, when a new technology came up, it would change your life. You go, oh, this is great. Oh, there's an upgrade to my Apple phone. Wow, I didn't know I could do that. nowadays, as we've said on the show, is these upgrades almost never make your life better. They make it more complicated. I mean, the most recent Apple upgrade, or not the most recent, but a recent big Apple upgrade was disastrous. I mean, I can barely keep the car on the road, trying to figure out just how to sit there and pull up a map or something. And I used to push one little button on before, and it's just, you go through this decision tree, but it's everywhere. If I see an upgrade, I don't upgrade anymore. I'm like, hey, it's not going to make my life better. It's likely going to cost me money, or it's going to cost me more privacy. And now something called the flock cameras are out there, these are license plate readers, and they're all over the place now. Yeah, and I pulled into my local academy, and there was one sitting in the parking lot. I'm like, what do you guys need every time I go to academy to recording where I'm doing an academy? And it's harmless, but people don't want to live. Look, if I want to live in a surveillance state, I would go to China. At least they've got a system of government and stuff that tries to think in the future, that tries to plan long term, and basically tries to sit there and outdo us. I think the United States can outdo anybody, but when you're hiring everyone based on the color of their skin in the United States, and China's getting the best and the brightest, long term we're not going to win. But I don't want to live in China. I don't want to live in a surveillance state. So why are we having a surveillance state in the United States? From the greatest country in the world, there's virtually no terrorism in the country for forever. And there's minor things somewhere, and they blow it up like the whole country is threatened. And then they put this surveillance stuff in, and it's people are becoming concerned. They don't want to live in a surveillance state. These flock cameras, they're all up on 99. They're everywhere now. And it's like, why are these here? And so there's pushback. People are cutting them down. They're spray painting over them. There's a huge pushback. And now the flock company is saying, well, look, we're only going to keep the data for a couple weeks or something. And they found out that people were using to spy. Policemen would pull up and see what their girlfriends are doing on the flock cameras, where they went, whether they were going what they said. Clearly, the same information is going into the NSA database. I mean, honestly, because if it's not, then the NSA wouldn't be doing their job. So, but this is leading to a pushback. I mean, if the technology no longer becomes helpful. Now, as an example, if we get robots coming out, I can see, hey, Ted, you can go buy this robot. Wait a minute, it'll clean the house, it'll do everything, and it'll watch my house, guard everything. That might change. It might be expensive, but hey, that would help. And maybe I want it, or maybe I think I don't want to do that. But I can see where it makes the difference. I don't see where all this technology, all this spying and everything is doing good for anybody. The data collection, there's a story out that McDonald's is now, they're using their app, which every time I go to McDonald's, would you like to use your app? I'm like, hell no. Every single time, I'm like, you've asked me 50 times already. But then they're using the app to determine when people are going to eat and what they're going to eat, and then they can start manipulating. Why would you subject yourself to that? Hey, just get the person at the counter. I'll tell them I want a Big Mac meal or a quarter pounder of cheese, medium size. How hard is that? That took me like 5 seconds. I'm done. I don't have to be pushing an app trying to figure out what I want on the phone. It's like, don't waste my time. My time is valuable. I like peace and quiet. I'm not interested in learning how to use everybody's app. I don't want you spying on me. I don't want you manipulating me. There's this fascinating story. I think maybe mentioned on the show last week about someone got like a burner phone type of thing, and then he went around into kind of the low income parts of town, bought a few things, looked up stuff on it, in the third ward or whatever. And then what he found out was he was getting cheaper products than his other phone that was in the better place. And what that was doing is that these people that again, they're building these dossiers. Oh, Ted can spend more than Bob, or vice versa. We're going to charge him more. And so we've said this data collection is not in anybody's best interest except actually, quite frankly, big companies. It's almost like I kind of don't care if the government gets it, but if the company, I hear this like, don't get Chinese technology. I'm like, what are they going to do? Spy me? Everybody else is spying me. What difference does it make? And the one thing I think we can all agree on is corporate America doesn't need to be spying on every aspect of people's lives and then cooking up some premise like the flock cameras, like we're helping crime stopping. Well, listen, I think it was Fox One. They pointed out that our founding fathers, the police just can't go raid your home and they have to get a warrant and everything to check it out. Well, why did they do that? They did that because the Brits would come in and just, they had the troops everywhere. And if they didn't like you or you had a problem, they would just storm your home and check out and look all over your house. And they hated that. And yet somehow we let these people get into our lives for absolutely free and take everything in privacy from us and then use it against us in economic warfare to charge us more per products. And I think this is going to be one of the bigger changes going on forward. And again, here it is in the Wall Street Journal, how America's becoming a nation of Luddites. Well, there's a reason for that. It's not, Americans love technology, but they want something that's going to improve their life. They don't want to have a spy in their house. I mean, these Alexas, why would you put that in your house? It's spying on you 24 hours a day, recording it and selling the information to everybody. Anyway, enough of that. Sorry, but I think this is a big story coming out, and you couple this with the socialism coming out of the in different places, and it's scary. And I think it's important for the Republicans to understand that, look, you can't just go, hey, socialists are completely crazy. You better have a plan that says, oh no, but we're very populist like you are. You better have a plan to show young people that you're going to make a difference in their lives. Otherwise, the socialists will claim they're going to make a difference, and then they'll go, well, the Republicans don't seem to care. All they're concerned about is helping the wealthy. That's not a good look. And so you have to communicate how deadly socialism, how the incredibly destructive record socialism has. At the same time, you have to communicate what you're going to do to change the situation and make American, particularly working people's lives better. And I think that's a big mistake I'm hearing from a lot of people out there. A couple thoughts. We have a free newsletter that goes out once a month talking about these big issues. We try to take complex issues that you're not hearing about elsewhere. We try to take them and bring them to you so you can understand them and you can prepare yourself and protect yourself and your retirement. Our Max Out Saving Report is all about saving wealth, building up money for retirement, managing through retirement, understanding the health issues at retirement, and it's all free. Look, this is the same report that in 2007, October or November, we predicted a failure of an investment bank, and we showed you the balance sheets. We just didn't say, oh, everything was going to collapse. We said what was going to happen, and we said why. And we took that. After the war with Ukraine, we said we're going to see a big inflation. We laid out, we showed you all the different commodities and percentages coming from over there. And so we laid out the case. In late January, first week of February, we said this COVID was going to be a huge thing. We talked about R-naught. Nobody else had talked about R-naught factors. We went and looked it up in a London paper and brought it to you. We tried to get you ahead of these big issues. If you get a chance, go to our website, maxoutsavings.com. It's maxoutsavings.com. And you can sign up for the free report. If you need some help, if you need some help managing retirement, that's our main business at Max Out Savings Advisors, is helping retired people with an old 401k plan or trust or something, manage it conservatively using our value investing approach to the stock and bond market. So you can request an appointment. We're here in Houston, Texas. I'll sit down with you personally and show you how we manage money. We use Charles Schwab, the custodian of the assets, and we simply manage it for you. So if you need some help, go to our website, maxoutsavings.com. But in the interim, remember our motto and philosophy, which is to save aggressively and invest conservatively. That, my friends, is the key to building up wealth over the long term. I hope everyone has a great weekend. We'll see you next week right here on the Max Out Savings Show with Ted Geoca.
This has been the Max Out Savings Show with Ted Geoca, a presentation of Max Out Savings Advisors. Join us next Saturday at 10 a.m. for the Max Out Savings Show with Ted Geoca on AM 1070. The Answer.